All right, so it's 4 o'clock, and again, thanks for taking the time out of your day today. It's already the end of September, pretty much September 23rd. Next week is already October, and the year has gone by very quickly. And we've come out with a lot of new tools this year at Orderflows, and our latest tool is the Orderflows Flowbounce. And really the way I describe it is combining order flow with aspects of volume profile rather than simply relying on the order flow itself. You're adding in aspects of analysis from the volume profile. I always say order flow is a tool, right? It tells you what's happening in the market. And when you start using order flow with other forms of analysis, it really opens wider, sort of your net for fishing, so to speak, in the market. And that's sort of the way that we're going in the future with order flows is, I want to show you how to use it with other parts of market analysis. So, before we begin, just a brief disclaimer, we're all adults here, right? We do understand that trading involves risk, and risk capital is money that can be lost without jeopardizing your life or your lifestyle, right? And if you're going to trade with money that you put aside specifically for trading. You don't want to trade your mortgage money. Sometimes people have this concept of um, a race against time. Oh, Mike, I need to learn how to trade in the next 30 days because I just lost my job, and I've only got enough money to last me about 30, 1 month, 2 months, and that's why I need to start trading. Don't put yourself in that position. If you are in that position, you probably shouldn't be trading in all honesty. So today's agenda, what we'll be covering is what is the flow bounce? I'll be talking about settings, markets, timeframes, and timeframe settings. It's when you're dealing with an indicator of any sort, right? It shouldn't be specific to just one market, right? Because if you have a method of trading that only works in mini Nasdaq, but doesn't work in any other markets, well, it's probably not going to work consistently for a long time. It may work now, it may work on the last 2 months of data that you analyze, and then going forward, it may, work off and on for the next, 2 weeks, and then, after that, just completely falls apart. A solid method of trading should be transferable to other markets and preferably other timeframes. And that's what I'm going to get into a bit, with examples and everything. We talked about the differences of the settings of the flow bounce, talked about the trade entry signal. And at the end, again, I said I'll be taking questions at the end of the presentation. So, again, if you have a question or anything, feel free to put it in the chat or the question box. Again, but I won't be getting to them until the end of the session. So, just really briefly, some of the misconceptions about what order flow can do is, a lot of times people think that order flow is going to give them every single turning point in the market. Like, sometimes you see the market drop sharply and then rally up. People think that order flow is going to give them exactly that turning point, and it's going to tell them exactly what happened. Well, it doesn't, okay? It doesn't find every single turning point in the market, right? There's a lot of randomness in the market. And what do I mean by randomness is, there's a lot of orders coming in for many different reasons, okay? But order flow allows you to see when market activity is not random, right? When everybody is sort of piling in to the market, or everybody's running into the exit, or traders get trapped at a certain price location, or there's support forming, or there's resistance forming, or momentum is starting to pick up, right? Order flow allows you to parse out those moments in time when it's crystal clear. Okay, it's not going to give you every single turning point in the market, right? It just doesn't. And again, it should be able, order flow can be used on different time frames, okay? And I'll be showing you charts later. Sub 1 minute charts. People think, oh my gosh, sub 1 minute charts. I can't trade that. That's too fast. And then they go look at a 3 range chart or a 133 tick chart. But 30-second chart is fine. I use 30-second charts. I even know traders that use 5-second charts, 15-second charts. But you know, then I see people trading with heat maps and looking at a dome, and they're just really trading almost every single tick that goes through. But if I saw, look at a 30-second chart, oh my gosh, that's so quick. But then they're looking at a nanosecond chart, or they're looking at a dome, which is much faster. But with order flow, okay, it really behooves you to be looking at and trading shorter term charts. Now, that doesn't mean that you get into a position, on a 30-second chart, you have to hold it for a minute or 2 minutes. No, you can hold it for as long as the order flow is conducive to your position. You could hold it the rest of the day if you want. But the thing to remember is, as soon as the order flow starts changing, you should be able to pick that up right away. Okay. And, sort of a question that I get, quite often is, how is this different, right? How is Flowsbounce different? Anytime I release a new tool, the question asks is, how is it different from something else that I've released? The flow shifts, flow scalper, driver, delta scalper, etc. Well, there's so many different parts of order flow, right? So many different nuances, so many different ways to look at order flow that, because there's so many useful pieces. There's delta, there's point of control, there's imbalances, there's max delta, there's min delta, there's bid volume, there's the ask volume, there's cumulative delta. So there's so many different ways to break the market down and look at it that, if you're just looking at something like, your standard indicator, I don't know, MACD or RSI, yeah, you're just changing a number in the moving average, right? That's all. Basically, that's all. Many of these price-based indicators are just basically mathematical. I'll say formulas, but sequences. Okay, and Flowsbounce is different from anything else that I've released before, because this is the first one that also uses not just order flow, but it uses parts of the profile analysis, right? The volume profile, because volume profile tells you how the market trading over time, right? Order flow tells you what's trading right now. So you're able to combine these different ways of looking at the market is going to give you a new view on the market, right? Order flow prints what's traded. Okay, it's the truth. Okay, for example, 5 contracts trade at a price, right? It trades at 5 lots of crude trade at 71.91. That's it. There's no debating it. It happened. Okay, but a volume profile during the day is constantly changing, right? Because there's volume being printed over time at a certain price, then it moves away, moves down, moves up. It's evolving as the trading day happens. And this is, for example, this is crude oil today. Okay, now obviously, it's up here at 73.25, and you have this profile that's, you're forming some value up here. Okay, well, there was value down here. Now, what are you going to do as a trader, right? People like to look at volume profile. They in my opinion, they look at it a certain way because that's how they read about it in a book, right? And they think, oh my gosh, I got to start trading it this way. But you could really dissect the profile and break it down into smaller time periods, right? And analyze the market from that sense. Now, because honestly, anything that happened down here, at the bottom half of the profile right now isn't very useful to you, because you're trading well above that area that traded much lower, up below 7,200. When you're trading 72.25, what you should be focused on is how value is forming up here, right around where we're trading. What's going on with the value and the volume profile? Wheat, right? This is wheat today. Perfect example. Double distribution day, right? Your low is this red line down here. Early in the day, overnight, you had, you coming into the day session, it looks like we're going to be forming, just a normal day, right? We're gonna fill it out, but lo and behold, we went up and we formed a higher value area up here, right? So, even though you got this nice big point of control down here for most of the day, you're above it the whole day. So, this point of control is not going to be useful for you in your analysis, right? You want to be focusing on what's the point of control doing, how's it forming, now. I mean, with honestly though, with grains, it's almost like you have two sessions, right? You have the night session, then it sort of shuts down for a little while, then it reopens the day session, and you trade much more volume than you trade overnight. But there's still value to be had in here if we're trading around here. But in this case, today we open up and put in that higher value, and it's just like ignores the rest of it, right? But there's pieces of information in this value that was forming up here, right? But if you're looking at sort of the big picture, right, this information isn't going to be very useful to you, right? Everyone, you read the books on volume profile, market profile rather, and you say, well, it's going to kind of come down here. This is just going to be your support. Well, what good is that support if you're never going to touch it, on the session that we're in? So that just sort of leads me to telling you, don't work based off what's happened in the past, right? You got to really base your trading on what's happening now, right? Because what happened in the past is not always indicative of the future, right? I mean, you see the disclaimer: past performance is not necessarily indicative of the future, right? And how the market traded in the past isn't always an example of how it's going to trade in the future, right? You could look at charts, oh, I've seen this pattern 100 times, right? And 100 times it does this, and then okay, the next time you see it, well, it's done it 100 times. Oh, that's the one time you put your trade on, it doesn't work. Well, exactly, that's what they mean, because that's where you're going to run into problems. So remember, right, something that gets lost on a lot of people is, who are you trading against, right? Well, you're trading against the more experienced traders, right? The guys on Wall Street, right, and on Jackson Street in Chicago. They're the all-stars, right? They're the first ballot Hall of Famers, so to speak, right? You think you're going to beat them? No, you want to join them. So you want to be going really with how they're trading, right? They have much deeper pockets than all of us. They can withstand a bigger, deeper drawdown than us. So, if you're going to be trying and going against them, based off of sort of traditional forms of analysis, chances are you're going to lose. Okay, and that's why, in this day and age with computing power, on a desktop, it's amazing what you can do, and the types of analysis that can be performed. Because, at the end of the day, I hate to say it, but it's almost like an arms race in terms of computing power, and most retail traders are going to lose. So, the best way to do it is to sort of, I hate to say follow along, right? Because in a sense, you're not following along with the crowd. You're following along with the smart money, so to speak, right? The professional traders. So, just keep that in mind, okay? Because that's where order flow shines, is being able to identify really what the big traders, the professional traders, are doing, right? If you're looking at a normal bar chart, you can't determine what the volume is, right? And you just can't see what volume is trading at price, right? That's why people started looking more at a dome. In the early days, they would look at time and sales, and they started moving to the dome. And then, they realized it's moving too fast. They needed another way to categorize the data. And the footprint chart was born. And it's a terrific tool for looking at the data. Now, markets to trade with the Flowsbounce. Well, you can pretty much trade most markets, okay? I don't want to say you can trade every market, because maybe someone's going to say, well, I trade Kospi index. Well, I haven't looked at Kospi index. It should trade the same way, but for most of us, 99.9% of us, it's the main markets, right? ES, NQ, crude oil, Russell, mini Dow, Bunds, DAX. I don't even have gold on here, or euro currency even. The main markets, the markets that we all trade. Now, where it gets interesting is in the time frames to trade. I find sort of the sweet spot for order flow in general is between 30 seconds and 5 minutes charts, right? 30-second chart to a 5-minute chart. It could be a 1-minute chart, it could be a 90-second chart, it could be a 2-minute, 3-minute. But 5 minutes is about as long as I'll go. Now I do keep up like a 15-minute chart, just sort of have, if nothing's really going on in a market, or I'm bored with the way the market's moving, I'll look at a 15-minute chart. Maybe I could see something bigger in the structure or something. But really, for trading order flow, you want to keep it less than 5 minutes, because again, you really want to be trading what's happening now, right? And if you're trading a 15-minute chart with order flow, well, for one, you're going to put in a lot of data in the footprint in 15 minutes, and you're going to overlook some things because it's going to get filled in with volume. All right, and the same thing with 5-minute charts. That's why I say 5 minutes is sort of on the extreme side, sort of pushing it in terms of activity, right? You really want to take advantage of what you're seeing right now in the order flow as quickly as possible, right? You don't want to be putting it off, and then the move happens and you missed it because you're trading such a long time frame. Now, volume-based charts are also good, because it's based on volume. Okay, now you have to know your market, okay, because you're not going to trade, say, a 500 E-mini chart the same way you trade a 500 volume wheat chart, okay, because they're two different beasts. A 500 volumes in the E-minis could be 3 or 4 trades, whereas 500 volume in the wheat chart could take 5 minutes to do, okay? And the same thing sort of with tick-based charts. They're formed differently. They're based off of each trade that occurs, whether it's a 1 lot or a 5 lot or a 50 lot. That's one tick. So again, know your markets and sort of understand what's what's normal, right? And what's fast and what's slow. Now, so let's sort of jump into the settings. Now, I'm going to pull up some charts here, but the purest setting, we call it the pure setting. I'm going to show you this, but just really quick, before I jump into the charts. On the settings, there's things like a swing filter and a swing period. These two are linked together. There's an enhanced look back filter, okay, which I'll show you on the charts so you can understand it. Now the bounce strength, this is the important one, right? It's a value between 1 and 5, okay? 5 being the strongest, 1 being the weakest, okay? Now when I say pure setting, the way I used to always look at this is basically with a setting of 5, right? And until we're able to put it into a program, a software program, I never really looked at these lower levels, right? Because I would look for the most obvious, which was basically the strongest. But then as we're able to program it, I said, well, what if I'm looking at sort of because again, every market trades slightly different, even though generally they're the same. But what if I, instead of having such a high tolerance level, what if it's a little bit weaker, or a weaker, and that's why we have a strength level of 1 to 5, but 5 being the level that when I'm looking at a chart visually, I could see it, with the profile, with the order flow. That's the normal setting. Okay. Now there's a minimum difference level, okay, which is it's just like a filter basically, and it deals a bit with when you're looking at the value in the profile, right? How far away you are from it. 0 would be disabled, and again, it's a value between basically 1 and 5, with 5 being the highest. But if I use it, I generally use 0 or 1. Okay, and on more volatile markets, I may use a level of 2, 3, or 4. But those markets would be like NASDAQ or MNQ, even YM. But for a starting point, right, for all markets, I would suggest 5. Again, swing filter disabled. If you don't have this checked, you have the swing filter set at 1. It doesn't matter what you have it set at as long as this is not checked here. But 5 and 0, that is what I call the pure setting, which is, you know, basically the setting that when I was looking at a chart, that's what I would use. So for example, here, I'll just, you know, again, it works on a footprint chart as well as a bar chart, but for today, I'm gonna focus more on a bar chart because it's just easier to see, in my opinion. I can cover it a lot quicker because one, not a lot of people, you know, not everybody is using a footprint chart, and two, you know, there's only so much space that you could have on a footprint chart on a screen. So, you know, we'll start here with this footprint chart. So this is the E-minis today, okay? Now the settings, right, which I just talked about, okay? I have it at its lowest strength level here, 1, right? I have swing filter turned off, enhanced look back turned off, bounce strength 1, minimum difference level is 1, okay? So that's about as low as you can go. Disabled minimum difference, disabled enhanced look back, disabled the swing filter, and the bounce strength set at 1, right? You can't set it at 0, right? Because you're gonna set it at 0, might as well just not use the indicator, okay? So you can see here, right, the signals. Now, if I'm looking, if I set it at here, you see 5, right? Whereas before on the other chart, this was 1. Okay, so now the bounce strength is 5. Okay, so here you see a sell, a buy, a sell up here. Now, when it's set at 1, right, you have the sell here, buy, 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 sell, sell, sell. Okay, so you're seeing more signals with the weaker setting, right? Because in this case, the bounce strength is set at 1, right, which is as low as you can go, right? And it's not using the swing filter, it's not using the enhanced look back, it's not using the minimum difference level. Now, when we set it at sort of the pure level, which I call the pure level of 5, with again, no minimum difference, no enhanced look back, no swing period, you're seeing the sell, just the sell, the buy, the sell, okay? And again, when I talk about the pure setting, again, you know, this is the starting point, right, where you want to really start with all markets. You know, sometimes, yeah, I should update the user manual, because in the user manual I don't have this part about the pure setting. I just jump right into the settings of particular markets. And if you know, are using, you know, a low setting like this, everyone's, oh my gosh, you know, there's so many signals. How am I supposed to trade this? Is this too much? Well, you know, ideally, you know, really what you want to be starting at is, you know, the pure settings, right, to catch the move down. And again, you know, the thing to remember, right? I mean, while we would like every single trade to be a winner, right, you're still reliant on the order flow, right? You're still reliant on order flow going in the direction that you want it to, right? So you want to, you know, for example, if you're getting short in here and there's no follow through order flow, well, the market's not going to go in your direction. Just as it started to go here, then it just went sideways. There wasn't that order flow to push the market lower or here, right? Now you're getting some here, you're getting some here. This one, nothing, but then it flipped and returned bullish, right? Here, it just sort of went sideways, sold off a little bit, round back up, then you got a nice run up, you know. So again, you got to understand, how to trade, right? It's not about being right 100% of the time, or being right 90% of the time. It's about being right enough of the time, but when you're having the winners, you know, here to here, being bigger than your loser right in here, right, or in here, right? Here's, doesn't look like much, but this is, you know, what a move from, what is that, 24.5 up to 30. It's a 5-point move. This is over a 10-point move. You got a nice little sell-off here, nice little rally here. Again, these don't look like much because today or this week the market's been going all over the place. But there's a move here from the 50s, 53, down to what? 43. It's a 10-point move here. Okay, and you can see a lot of these, right? Going back, yesterday, right? Fed day. Look at that. It nails this high right here. Right? You have a sell-off here. Little areas where you're just sort of going back and forth. This one about a half hour after the Fed announcement, a little move there. Trading a Fed day is always going to be tricky because things can turn on a dime. But earlier, there's a nice move here, right? 90s, 495 all the way down to 84, 85. A little move here. But again, because people always say, well, they see this and say, well, this was a loser. Well, yeah, you should have been short from up here, okay, to down there. But there's just a lot of these trades. This is the overnight session, right? Again, it gave you a buy signal here. It didn't really work, right? But then it gave you the nice sell signal to cover it back. Right? Go back, previous day. This is the 21st. A little bit more difficult day. Well, that was Monday, right? That's the Evergrande news hitting the market. Early in the day, some nice moves here. Nice move back up here. Again, you have a little move here, okay, but then you catch the nice move here from 40. Up here is 55. I mean, this is 10 points right here, 50. But I'm not saying you would have bought here and sold up here, but there's points to be had in the markets, okay? And again, if you're looking at a footprint chart, okay, and a volume profile chart, honestly, it's hard to see, right? Because you're trying to juggle what's happening in the footprint along with what's happening in the order flow. Okay, do I got it set up right? So I'll make sure. Let's go back to some of these signals here. So here's a sell signal, okay, right in here, right? It's actually this bar, but I'm going to talk about this trade entry signal a little bit later. And it's moved a little bit. This was a massive move. It went down to from here to here. But again, if you're looking at, a lot of people have a profile up on their chart. But again, you're up here, right? There's point of control is down here at 39. You're way off of it, and even earlier, you have volume all the way down here, right? This volume, even though it prints, right? Earlier, you had volume coming in here at 28, 29, 44, 29. You want to be using what's happening now, especially with the profile, right? Because it's nice that you have, your point of control is here, your value area is probably somewhere up here, your value area low is somewhere probably down here. But how can you use that, right? When you're trading so far away from everything, right? Because again, that's what everyone tells you about. Oh, you got to use the value area high, the value area low for the day. Well, what use is it going to be, right? If you're trading so far away from it, right? Or up here at the high of the day, right? This is the high of the day at this time. It trades 500 contracts, 522. So looking at the profile for the day, honestly, you're up here at the high. What use is all this information down there? There's got to be a way to use it, and that's what we've put into the Flowsbounce, right? We're taking what's, how the profile is forming up here now, right? And putting it into context with what's happening in the order flow right now. Because again, having a point of control at 33 when you're trading 50 or 39 when you're trading 54, 55, you know, isn't going to be very useful to you until you start coming back down towards 39, right? So, you know, that was really the whole goal of the flows bounce, is to take the information that we're seeing in the order flow with information from the profile, more recent information from the profile, and put it into a useful tool, okay, so that we can use profile, we can use order flow together. All right, now let's go back here. Okay, so this is crude oil. Okay, so this is a 30-second chart. Let's see what the settings are on this. Okay, so this is a low setting, right? 1 and 1, right? Bounce strength 1, minimum difference level 1. Okay, now is there a lot of signals? Well, yeah, because the setting is set low. It's set at 1 and 1. Okay, so this one has a minimum difference of 1. But again, balance strength is set to 1, which is as low as it can be. Now, this one, okay, what is that set at? Set to 2. Well, this one has a look back period of 1. But, you know, for example, let's just turn it off here. And, you know, we'll just set it at 5 and 0, right? You're going to see a lot less signals coming in, right? So this is the pure setting, 5 and 0, right? Again, this is the setting when I would look at a footprint, I would watch the profile and put the two together, okay? So, yeah, here's the profile, or sorry, here's the flows bounce, right? Sell, buy, sell, sell, sell. Now, again, earlier in the day, you know, people say, well, you're covering up the losing trades. Yeah, there was, you know, a small move here. You know, it doesn't look like much, but again, it's a move from about 40 down to below 20. Obviously, there's a move here up from, you know, the 04, 05 up in here to almost 30. You know, this one admittedly didn't work. This one didn't work. Okay, you know, you're going to have trades that don't work, just as you're going to have trades that, you know, do work. You know, this was yesterday in crude. You know, this is the trade. You know, as a trader, these are the trades you love, where it just sells off, maybe pulls back a little bit, then sells off sharply, right? But again, you know, this is when I talk about settings, these are starting points. You know, I hate to sometimes give people settings that they think they have to use, right? As a trader, you have to refine the settings based on your personality, right? Now, the market doesn't care about you personally, right? It doesn't know your personality. So you have to sort of develop your own trading personality that you're comfortable with in the market, okay? Because you can't make the market do what you want it to do. You have to follow along with what the market is doing. So you when I give you settings, right, these are starting points, because, you know, every trader is different, right? I know traders that, you know, they can't stand any sort of heat, right, of position coming against them, right? You know, oh, like, you know, just here they only want trades like this where it goes directly up, 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 right? They can, oh my gosh, you know, I sold it at 37, I got stopped out at 42. You know, they want to jump out the window. You know, trading, you know, it's a rigged game. Well, there's going to, you know, this is what everyone talks about, right? Let your winners run, keep your losses small, is knowing where you're going to be wrong in the market, okay, and managing it. You know, from that's what trading is, right? You're trading off risk, basically, okay. Now, let's take a look at sort of a different setting, right? So that was the pure setting. So because I had crude oil as a good example, the swing, using the swing setting here, right? So you enable the swing filter, and really what that means is you're looking for a swing high or a swing low, okay? So going back to our crude chart, all right, so, you know, I have swing disabled, okay? there's no check mark in it, right? You could put a check mark in there to enable it. Now you could choose a swing period, 1 being the lowest. You can't put 0 in. If you're going to put 0 in, you might as well just disable it. But you can put 1, 3, 5, 10. People like to use fib numbers, but you really, I wouldn't go over 25. But if you have a period, like 10, okay, let's take a look. Okay, you're going to get less signals, right? Because 10 is a filter, well, the swing filter, but you're cutting out a lot of trades. Okay, now does it mean you're going to have better trades? Well, that's debatable. You'll have less trades. Technically, you should have more trades that are coming in at swing highs or swing lows. Again, we all love to buy lows and sell highs, right? Not just buy low and sell high, but if you could buy a low and sell a high, that's you feel great, right? I mean, you'd love to sell something like this, right? At the high, right? That's what you want. And if you're using a swing filter, that's what it's going to help you do, right? You could find swing points. Now, again, if you're filtering out, something strong like 10 for a swing period, you could play around with finding your level, right? Because 5, remember, the bounce strength 5 is the highest you can go. Okay, so 1 is the weakest. So if you change it to 1, right, from 5, there should be a lot more signals, even though you have a swing filter, because now the bounce strength is much weaker. So is there more? Well, there's a few more, not a lot, because the filter of a swing period of 10 is going to sort of remove a bunch of trades. So here yesterday, right, you can see the sells, the buys aren't really working out that great on this day on a market that's selling off until it turns around, then the buys will kick in. But you see the sells grouping in here, then the buys really start kicking off. Now, if, for example, if I take off the swing filter, right, it's going to be a lot of, you're going to see a lot more signals. Let me just drink some water here, right? You see a lot of signals, right? Because that's as weak as you can have it. So again, depending, if you're somebody that's trading on a dome and you're looking for reasons to be buying or selling, based on the order flow, right? If you're just really looking for, a few scalps, again, while it may not look like much, but if you could be buying it here at 69 and selling it at 75, someone that's just looking for ticks, it's a very useful tool as well, right? As if you want longer runs, right? Again, you're getting those moves as well. So it really depends on the setting and how you want to trade it. Okay. So again, the starting point, sort of the starting points would be 5, right? For balance strength 5. Okay. Now again, you could use a swing filter of 1, right? Which would be sort of the weakest swing filter. So again, if I have, for example, let's just go back here. Okay, so I got set to 1 here, bounce strength. But if I set the swing filter to 1, okay, it's going to take out a lot of these, like this short here. I might keep that one there, but it's going to take out some of these losing trades, or some of these trades that didn't really work out, because with the swing filter off, it's basically giving you the signals anytime it happens, right? So here you can see how it's cleaned it up a bit, right? You're not seeing those shorts in here. Okay, now it's a bit cleaner. You're seeing more consistency in the signals, right? And that's why we have that swing filter, because again, anytime you could find a swing, a turning point in the market, now the swing filters basically is just looking for a bar that's got a lower low or a higher high. Okay, there's no I hate to burst people's bubble, but there's no big scientific thing behind it. It's looking for a lower low or a higher high on a swing sense, okay? Now, let's take a look at this other setting in here, right? The enhanced look back filter, all right? Which, again, it's not something that a lot of people are going to use because it's going to really filter out a lot of trades. And I think it's really, well, it's really for more volatile markets, okay? You know, if you're using a fast moving NASDAQ or MNQ chart, or, you know, you trade, you know, DAX chart. And let's just give you an example here. DAX, I've got DAX here, okay? So this is a 50 volume chart, right? And DAX, you know, 50 volume, it moves pretty decently. So you can see there's two charts, right? There's a chart on the top, there's a chart underneath it, okay? Now they both have the enhanced swing filter on, okay? This one is set to a strength of 5. This one is set to a strength, the lower level is set to a, set to a strength of 1, okay? So you can see at a strength of 1, there's a few more signals than when it's set to a strength of 5, right? But if, let me just make some changes here. If I don't have the enhanced look back filter on the top chart, and I'll set it to 1 so it matches up the chart on the bottom, right? So they're going to be the same, except the bottom one down here has the enhanced look back filter on, okay? Okay, so they're both set to a level of 1. The bottom chart has the enhanced look back filter. The top one does not, all right? So you can see, obviously, there are a lot more signals, right? So, you know, on a market like DAX, you're not going to want to, honestly, you're not going to want to use a level of 1, right? You're going to want to use a stronger level because it's slightly more volatile than your normal market, all right? So if, you know, let's play around a little bit. I'll make this a 5, bounce strength of 5. The bottom one, I'll keep the enhanced look back filter on, but I'll change the bounce strength to 5. And you can see here, right now at 5, you're getting some decent signals even without the enhanced look back filter. You know, you're getting some of the same, you know, you're going to get some of this, you're going to get the same ones that you would have with the enhanced signal, but you're going to get the ones that aren't enhanced, okay, if that makes sense, right? So you can see, right, in this period here in the morning with the enhanced filter on, there was no trades. Without it, you're catching all these little rotations up and down, up and down, up and down, right, back and forth, right? You're just getting these two sell signals here with the enhanced feature, but without the enhanced feature, you know, you're getting this nice buy here. You're still getting those sells, you're getting a little sell here. You're getting more trades, right? But again, you know, people will say, well, you know, this was a losing trade, this was a losing trade. You know, it's about cutting your losses short to catch the ones that are going to ultimately pay off, right? Catch the nice moves, right? It's not about catching every single move in the market. Yeah, you know, I would love to have an indicator that's going to tell me to sell here, buy here, sell here, keep it short, cover it here, get short again here, cover here, short again up here, buy here, add some more. But you know, order flow can help you. That's why we develop different tools, right? Because what's happening that's telling you to get short here, right, is a unique thing in the order flow, right? But now, you know, on a different way of analyzing order flow, it could be telling you to buy here as well. So there's so many different ways to use order flow, right? There's not just one way to use order flow. Let's take a look at gold, right? Gold had that nice move down late in the day. What do I have on here? Okay, so it's set to 5, right? Again, this is the pure settings, just 5, right? Disabled, disabled, 5, and 0. Are there any trades here? Well, there's a buy here, a little move up. Excuse me. You know, some on a market that's selling off, sometimes you're going to find yourself with these buys. Now, again, I said it's a starting point, right? Some days are going to be better than others. Okay, I mean, in the morning, early European hours, you know, 3 in the morning Chicago time, you get a nice buy, a nice sell, a nice sell. It struggled the early on in the US here, you know, a little bit back and forth. But that's why we have the filters, right? Again, if I were to change this to, let's talk about the minimum difference level. Okay, so I'll use a minimum difference level of, I don't know, you know, 1. Well, 0 would be disabled. 1 would be at the minimum of the minimum difference level. 2, a little bit stronger. 3, 4, 5, you know, a little incrementally stronger. Now, if I was using a minimum difference level, I don't have to stay with 5 for the bounce strength, right? I could use, you know, 1, because now I've got, whoops, a slightly different filter. So I could add, you know, I could make it a little bit stronger on the minimum difference level, because now I got bounce strength as low as it can be, right? So it's going to give me a lot of signals, but now I want to find, you know, sort of hard to describe the difference level, but it deals with, you know, on the order flow versus previous bars, okay? But I'll set it to 2 here, 1 and 2. So just to give you, you know, a feel for its, you know, what it's going to change, right? So now you're seeing a little bit more consistent signals here, right? A buy here again on this market that was dropping. You get long, you get stopped out. You get long, get stopped out. Get long, get stopped out. And then you can get long here, long here. This one in here gave the long, the stopped you out, then got you short. This long a little bit. Here's a nice little long. These shorts paid out. Here's another nice long over here later in the day. You know, late in the day there wasn't much, but in the overnight session, or the morning session rather, it's a nice sell-off here. There's a little sell-off here. There's a sell-off here. You know, now because now I've using sort of a different aspect of reading the order flow in the sense of the minimum difference level. Minimum difference level is going to measure differences in one bar versus previous bars. Okay, that's where the minimum difference level is going to be. And setting it at 1 would be comparing it to the previous bar. 2 would be comparing it to the second bar. 3, we didn't see a need to go back more than 5 bars. So anywhere between 1 and 5 is fine as well. Go back to my gold chart here, right? This was yesterday, right? Fed day. Okay, again, you're not going to trade right at 1 o'clock when the Fed makes their announcement, but afterwards, you know, there's some trades to be had there, right? So it was a move from what, 86 down to where you got the buy signal 68. You know, these are those moves as a trader. You want to be on that side of the market, right? You don't want to be long, right? You know, sometimes what people do is they miss a move, right? They miss this move here from 79, 80 all the way up to, you know, 85, 86, and then, you know, they finally get long up in here, then they holding it, starts going against them, they don't take the sell signal, then it starts to go back up, and okay, yeah, now here, you know, they're rubbing their hands together thinking this is it, we're going back up, and then it starts to go back up to get the sell signal rather than get out or get short. They're still long, you know, then it breaks down like that. That's where you have to develop yourself as a trader, right? You have to be able to cut it, basically, you know, cut the trade and go in the direction of the trade. You know, especially on a Fed day, again, you know, I'm not a big advocate for trading on Fed days. I've traded Fed days. You know, some days I've done really well. Other days I've had my head chopped off and shoved up of certain body parts. But you know, you have to be able to adjust, right? And that comes with being a trader, right? You get this trade here, right? You're going up, up, up. Then it sort of stalls up here. Again, you know, I could analyze the order flow. I'm just using a bar chart to sort of give you more of an overview. But again, you could run it on a bar chart. You could run it on a footprint chart, right? For this presentation, I'm just showing it on a bar chart. If you start seeing, you know, the selling coming in, right? If I was looking at a footprint chart, I could probably see selling imbalances and things like that coming in here. You know, maybe some market exhaustion. That's my sign to get out, okay? Just as if I'm here, right, getting short, okay, and then it starts coming back on me, well, you know, that's your sign to get out. Don't wait for it to trade all the way up here, you know, to get out. You got to get out as quickly as possible to a trade that's not working out. And I'm going to talk about where, you know, where you want to be placing your stops, you know, in these markets, right? You know, these are the trades, right? As a trader, you know, start on 835, you get long here, 75. Okay, you trade it up, you know, up here at 78.60, there's a sell signal. Okay, so you're long from 75 in here, out at 78, short at 78, back down to 75. Okay, you're done. You're done for the day, basically. You don't have to sit through the Fed announcement and you know, pull your brains out. Now, remember, every market trades slightly different, right? And as a result, we have found that, you know, you're going to want to make slight adjustments in the settings, right? It doesn't mean that you're making drastic setting changes. You know, if you find a setting that works for you in a particular market, you're generally going to stick with it, right? What do I have here? I forgot already. 5. No, I got 1 and 2, right? Minimum difference level 1 and 2. Let's look at NASDAQ, okay? MNQ rather. What do I got here? Well, I think I got one similar setting in here. But if not, I'll just change it to, well, I got 1 and 4 here, okay? You know, if I trade gold, right, my settings are 1 and 2. First thing I'm going to do when I look at a market like MNQ or DAX or a market that trades similarly, I'll use the same settings, right? 1 and 2, right, that I'm using on this gold chart. That would be my jumping off point. Now, it doesn't necessarily mean that it's going to be exactly the same in terms of, you know, finding trades, but it should be relatively, you can see it says calculating here, you know, relatively similar because, you know, as long as it's a market on MNQ and NQ move around quite a bit. So it's one of those things that, you know, more volatile markets, you know, again, you're going to want that setting to be the minimum difference level. You could use it to, you know, to your advantage. So here, right, 1 and 2, okay? So the bounce strength is as weak as it can be, right? So you're seeing a lot of signals, and had the setting for the minimum difference level set to 2, okay? So, you know, you're getting some nice moves here, right? 300 up to, you know, 340, but you're still getting, you know, some of this sort of this chop, right? We sort of came into the support area in here. You can see it right there. You can see it right here, and a little bit of back and forth. Yeah, you can always, I hate to say clean it up, but you know, if you were to make it stronger, you'd probably have less signals. Minimum difference level 4, because NASDAQ is about as volatile a market movement as you can get. And when I use the term volatile, I mean it takes a market time. It's got to cover a certain amount of price levels to find a level that it can trade at, and everyone can be happy, right? NASDAQ, it seems nobody's happy. That's why you get such big price distortions up and down. Okay, so just give it a second here. But you know, other markets like, you know, MNQ here, this is a setting of 5, right? This is the pure setting, 5, right? Nothing else. MNQ, right? Market drop down here. Okay, you get stopped out there. You're buying it off this low. Still maybe you covered up here. Look for your next trade. Comes in here, back up again. This one doesn't work out. This again, nice trade. These sells don't really work out. This sell does, right? Again, this is the setting of 5, right? The pure setting right here is cash. Where cash open up here? This bar, right? So just after the cash open, boom, kicks off this buy signal around the 219, 220 area in here. It's a 100-point move, right? This is what 15 to 20 right in here. Signal is coming in on this bar within 835 up to, what is that, 905, 30 minutes. It's a 100-point move right there. But anyway, I'm not saying every move is going to be like that, but you can catch those moves, okay? And then as a trader, those are the moves. You're done, right? You don't have to sit around and bang your head and fear you're going to give money back. You're done for the day. Turn off your computer and go do whatever you like to do. So going back to this chart, so right, so it's set to 1 and 4, right? And this one was set to 3. Enhanced look back set to 3. Okay, strength of 3. Now with enhanced look back, you can change. It doesn't have to be 3. It doesn't have to. It's up to you to adjust the settings, right? And people say, well, yeah, you're looking at today's, and it did well. Well, what you do is, you could use market replay to go through all the different settings. This was the day before, Fed day, right? Again, I'm not a big advocate for trading on Fed day because you're going to have moves, just like this. But imagine you're getting long somewhere in here around 60. It's a 50-point move very quick. Again, it's a 30-second chart. So you can see how it performed, right? Again, it's not designed to tell you to sell up here and buy down here, sell up here, buy down here, right? What's happening in the order flow here is decipherable. What's happening in the order flow here is decipherable. What happened down here is decipherable. What happened down here is decipherable, all right? So there's certain activities in the order flow that just are really telling to a trader, right? Go back another day. I wish it would have caught this move, but it didn't. All right, it's not going to catch every single move. Okay, so it didn't catch this move up, but it caught this move down. Okay, this was, what day is this? The 21st. So that's Sunday night. Imagine you're getting short here or even in here, right? What is that? 985. Even if you sell it down to here, the 70s, down to here is 60s, down to here is 40s. But again, that's just Monday morning quarterbacking. When you're trading, you want to take your trade. I got stopped out. Take your trade. Okay, I got stopped out. Take your trade. Okay, did you get stopped out? It depends on where your stop is. Earlier in the day, again, similar. Boom, spikes up, get short. You catch that move there. Honestly, it's a weird week with all this Evergrande stuff, and then the Fed yesterday. But again, 2 in the morning, the 080 level, 15080, up into the 140s. There's a lot of flexibility, right? Depending on your trading style, right? Let's take a look. This is Euro currency. Where am I? What's the setting? I think this is the pure setting of 5. Yeah, 5. Okay. Again, is a buy here, but again, do you want to be buying after the market, you're up here at the high of the day? Do you want to be buying that? Probably not. You'd probably be looking, when you came up here for this little short up here, not the biggest move, but again, you could short 48s and you're covering it down at 42, 43. That's 10 ticks, right? Trades in half ticks, in halves. You know, there was a buy down in here. You know, there's a sell here. I wouldn't even consider this a short because you already should have been short from up here. This one, yeah, you would have gotten stopped out probably, or maybe broken even. The day before, Fed day again. Look at that. Get your short signal right up here for this big move down. Those are those trades. As a trader, yeah, you're going to be doing cartwheels. Again, a nice move up. Again, you know, so you get stopped out in here, or you take a small loss, or maybe you know, this one wouldn't have stopped you out, but you get short in here. Okay, nothing's happening. You get the buy signal in here. You cover it. You make a tick, 2 ticks, or maybe you scratch it. Then you catch that move up, right? It's not about every single trade being a winner. Yeah, we would like that, right? You're getting long here, but then you get the sell signal coming in right afterwards. You get short, you catch the move, right? And the same things in here. You know, now the markets trade 24 hours, so you know a lot of moves happen while we're asleep. You know, that's why having a tool such as markers is going to help you. Now, again, I talked about the DAX, right, with the bounce strength at 5 versus 1, right, with the enhanced strength. So you saw that already, how you can, you know, in a different market, have different signals, you know, depending on, you know, what you have the strength set at. You know, 1 up here, 5 down here, you're going to get less signals coming in, right? Now, the other thing I want to talk about is real quick is the trade entry signal. Okay, now it's something that I developed and I use in my trading to help me determine to take a trade or pass on the trade. It keeps me out of bad trades, right? The trades where there's no follow through order flow in the direction of the trade. At the end of the day, whether or not you buy is sort of inconsequential to the market, right? The market's going to do what the market's going to do. So if you buy, you also need other people. You want to be buying while they're also buying, all right? I mean, you get in before they're buying, but once you buy, you also need other traders to be buying along with you, okay? Now, it doesn't necessarily mean they're reading order flow or anything, but, you know, their perception of the market is bullish if they're buying, right? Just as if you're selling, you need that follow through order flow to come through. If there's no follow through order flow, the probability the trade will work out is decreased, right? It's going to have a higher chance of failing. So the trade entry signal, when enabled, will signal after the signal bar when the subsequent bars exhibit the complementary order flow in the direction of the trade signal. So again, you could choose to use a trade entry signal or not by unchecking the box next to it. Now the zone, right, is still going to draw out. I'm going to talk about the zones a little bit later, but let's just sort of jump into it here. So the trade entry signal, okay, you can enable it or disable it by checking this box here, okay. Now I use settings of 2 and 2, so meaning market has to move 2 ticks in the direction of the trade of the signal over the next 2 bars, and if it doesn't, there's no trade signal, okay. The zone is different than the trade signal. The trade signal is going to be what you buy or sell off of, all right. So again, you know, you want to be trading in the direction of the market. You don't want to be trading against the market. So when enabled, right, a signal will print on your chart in the bars or bar immediately after the signal bar, not directly on the signal bar. So what this means is when the conditions of the flow bounce are met for a trade signal to be generated, the order flow in the next bar or bars need to be in the direction of the trade signal, okay? Again, you can decide how many ticks or how many bars you want. You know, in some markets, slower moving markets, you can adjust it to 1 tick, okay? In some markets, you may not even want to use it, right? In some of the thicker markets, like ultra bonds, sometimes I don't use it depending on the tool that I'm using, okay? Because I want to basically take every trade that comes on a market that doesn't move around so much, all right? So it's, again, you can decide on how many bars. So let's take a look here, okay? I'll show you a couple slides and then I'll show you in real time. So this is the trade entry signal enabled, okay? So you can see this is the signal bar right in here. And then afterwards, you have the actual signal, the triangle up there, right? It's not on the signal bar, okay? And the settings will show you whether it's enabled or disabled, right? Having the check mark next to it, the word enable, okay? If it's checked, then it's enabled. And you can see in here, there's zones drawn out that there's no signal generated. It's just the zone drawn out from the signal bar itself, okay? But there's no signal, there's no trade that you're going to take there. Just as over here, right? This is the zone, so you have the signal bar, then it's telling you to get short here, just as you have the bullish bar down here, right? The first bullish bar, as this market was still dropping, didn't have that follow through order flow, right? And it's important because if a market is dropping, you want there, and if you're getting signals to buy on a falling market, you want to buy as at the low, right? Because you want the market to find its low, then turn around and start going up. And that's where, if you're looking at the order flow, right? And again, it doesn't necessarily have to be order flow. You can just use the bar, right? Use the price action. The price action's got to start going up, okay? Because if it doesn't, it's just going to keep going lower, right? And the last thing you want to do is buy, get stopped out, buy, get stopped out, buy, get stopped out. You want the market to keep finding its level and then start turning around. And that's where you participate, okay? So just, again, really quick, if it's disabled, it's not going to give you, okay, sorry, let me start over. When you disable the trade entry signal, so if you uncheck the box, right, where it says enable, if you uncheck that, then every time you have conditions met in a bar, it will print the blue triangle down, or sorry, blue triangle up for a buy, or a red triangle down for a sell, okay? Now, please note though, as the bar is forming and the order flow is coming in, a signal may appear and disappear, okay? But because the bar is still forming, right? The bar is not closed. But once the bar is closed and there's a signal, it will not disappear, it will not repaint. So on a chart, how it looks, right? Trade entry signal where it says enabled is disabled, right? So every bar that has a signal will also have the red triangle for a sell or a blue triangle for a buy. And again, you might not want to use this on all markets. I disable it when I say not use it. When on a market like ultra bonds, bonds, interest rates that move a bit slower, because those are markets that once they pick up a head of steam, just keep going in that direction. I disable trade entry signal because I want to see every single signal that appears, and then decide for myself if I'm going to take it. Basically, I'm using, the Flowsbounce or flow scalper or flow shifts as the tool to identify it, so that I take some of the heavy lifting off my shoulders, right? And then I can decide if I want to take the trade or not. But again, if I'm using, if I'm automated it, right? If I'm using markers from the indicator store, it keys off of the triangle, right? That's what it's reading, right? So if you're automating it, you want to be careful, right? You want the order flow to be going in the direction of the bar. So, for example, let's pull up some charts here. I don't know, let's stick with gold here. Okay, so for example, well, let me find a better example here. Okay, so for example here, right, so I have trade entry signal turned on, and in the middle here, there's this little blue box. It's this zone, right? It's telling you conditions are met in this bar for a potential buy, right? So the market has been coming off, and it's giving you a signal that there's a potential long in the market, okay, right in here. But there's no follow through order flow, right? You just get red bar, doji bar, and the market goes lower. This, if you get long, if you bought this, it would have stopped you out. You would have got stopped out, period, right? Which is not what you want, right? You want to get long and have follow through order flow, right? You want to get short like you are here and have the follow through order flow, right? To catch the move. You don't want to buy it and then immediately get stopped out 3 bars later, right? Now, if I disable, that's using the trade entry signal. If I disable it right here, trade entry signal, I uncheck that box, then it doesn't matter what values are in here for trade price level or trade validity. It will draw the signal there, telling me, hey, get long right here on the signal bar. Okay, I get long, and what happens? It fails. I get stopped out. I take the loss. So this is, the way I'm able to filter out. And again, you could take this trade. This one worked, right? This is one trade worked, one trade didn't. But imagine you're staring at this. Gosh, I wish I didn't take this trade. Well, using the trade entry filter keeps you out of that trade because it doesn't have the follow through order flow. You understand? All right, because even though it's market selling off and you're getting, based on the order flow, based on the profile, you're getting a signal of a potential long, but then there's no follow through buying by any other market participants. Instead, you got continued selling. You don't want to be buying right there, right? But over here, market shot up, then the selling pressure came in. It came into a level, on volume, based on profile, etc. And the order flow was bearish, and you want to take that trade, right? Because now you're getting that follow through order flow coming in this case, in the next bar. So it's the trade that you want to take, right? You kept out of this trade, but you're in on this trade. If you've ever gone over your trading records, right? Maybe you're 50%, whatever, 50% trader, right? Half winners, half losers. Imagine you could just remove a couple of percent, a few trades that you got stopped out on immediately. That's where having something like a trade entry signal, having to follow through order flow to sort of confirm the trade is going to help you. Now, in the past, I used to always laugh at, people that would say, well, I've got, be like, here, we got a double top here, right? Here and here, but I need confirmation. I need the market to break down, below the support area of 72, right? Your double tops up here at 74.5, right here, double top. But it looks like a double top, but lots of times they don't recognize it until it gets down here. Well, if you're waiting until it breaks sort of this support area down here, you're short down here at 72. But you really should be short up here, right? This is where the order flow is going to help you immensely, right? Because you can know based on the order flow that it's bearish here, that this is a double top, rather than, well, I gotta wait for confirmation, because once you get that confirmation, it's a false breakout and the market snaps back. So really your opportunity is in here, okay? So, when I say the trade entry signal is confirmation, it's quick confirmation, okay? Because that's what you want to do. You want to take advantage of the order flow as quickly as possible. Now, the zones, okay? You saw the zones being printed, all right? Now, I like to use it as sort of, a place where I can hide behind, right? That I know if it starts trading against me and it violates that zone, I should be out of that trade, period. Okay, so for example, now you could make it, the default is set to 5.